South Africa's December producer price inflation dropped to 9.8% year-on-year compared to 10.1% in November. Month-on-month, inflation fell 0.2%. South Africa's December imported commodities PPI increased by 5% to 16.4%. And Nkanyiso Hlongwa, who's economist at the Bureau for Economic Research, joins us now to unpack these numbers further. Thanks so much, Nkanyiso, for joining us this afternoon. Well, as global leaders congregate over at WEF in Davos this week, we've got investors and economists elsewhere in the world concentrating on data flow like this. We've got PPI numbers having come in and surprising to the downside because consensus had anticipated that this number would come in at 10.1% year on year. It's come in at 9.8% year on year. To what extent was it a surprise for you?
We were surprised as well. We were expecting it to come in at 10.2%. But having had a look at the numbers, it does appear that there was one major surprise with the coal. So that index came down quite significantly, and that what dragged the PPI down relatively lower than markets had expected. So the year-on-year they came, I think it's at negative 0.4 now. But other than that, I think if I looked at just the monthly contributions over the past couple of months, there haven't been many changes. Food continues to be increasing on the agricultural side and on the manufactured side. So it does appear that, a lot of the overall indicators still remain fairly high. But as I mentioned, the mining and quarrying where coal is what surprised on the downside.
Yeah, we had that downside pressure coming through from mining from 3% in November to 2.1% this time round. And it seems that it's effects of cost push pressures specifically that came in less, Nkanyiso. So run us through that and the kind of implications that's had specifically on this market.
Well, some of the cost push pressures, obviously, if we've seen some of the international commodities sort of easing slightly, that would be expected. I think part of the coal and part of the mining and quarrying, you've also got the petroleum products, which also came in slightly lower, but that's directly linked to the petrol price and the international oil prices. So, that fluctuates. For example, for February, petrol prices are expected to rise by quite a significant amount, and we expect that index to also increase in line with that. So some of them are volatile, but in line with other indicators internationally. But it does appear that there are cost push pressures, especially because we've had a relatively weaker rand. So one wouldn't have expected to see that, but it does again appear that I think the decline in the commodity prices, or some of them at least, may have contributed to that.
Let's pick up on that currency effect there, because the exchange rate depreciation has taken much longer than many had expected to filter through to PPI and CPI in general. So, how are you viewing things in that regard?
I think there's a few considerations. I think the first one is that a lot of the price pressures are being stomached in by your manufacturers and your sellers. So some of them aren't being passed through into the market as yet. I think the uncertainty just around the strength of the demand in many of the sectors remains an issue that producers would be thinking about. So you don't want to pass through significant price increases and then lose out on the volume side. We think that's one of the factors that's just limiting the pass-through of the exchange rate. But on the other hand, we do generally have a lag with a lot of these products, and we've had the exchange rate relatively weaker levels for about the past 5 months or so. We are expecting to see some of that, but in the imported inflation, it is already evident that the impact of the weaker exchange rate is being felt, especially with your petroleum products, which are obviously most of them imported, where you're seeing the impact of that exchange rate, and that's what's contributing to even imported inflation on the producer side remaining at such high levels.
Yeah, with that being the case, Nkanyiso, you've got to ask the question, for how much longer these producers can manage to hold off pushing those prices onto the consumer. Yes, they don't want to do it at the risk of losing volumes, but surely you've also risking survival by compromising on the pricing front as well.
Some of that is expected to start coming through, I think, a bit more this year. If we've even looked at the consumer inflation and the various projections out there, is that it is expected to increase from last year's numbers, or from the 6.1% we saw in December. Markets, the Reserve Bank and ourselves are expecting to see consumer inflation increase by quite a bit as some of the pressures come through. And I think with the Rand exchange rate having remained weak, some of the pricing power may come in. The consumer demand side hasn't really tapered off significantly, so you may find that relatively more producers and manufacturers may be willing to start pushing some of those price increases through, just in order to maintain their business.
Yeah. What's your outlook on the PPI front moving into this year, Nkanyiso? Because when it comes to the Rand, certainly it's a bearish tone that has dominated sentiment around the local unit for the most part.
Look, the PPI for this year, I think in line, what's going to contribute to it declining somewhat is, I think, especially that we've seen commodity prices decline. But, obviously that's all based on market sentiment. So if sentiment should turn otherwise and some of the uncertainty should be eliminated, then you may see a different outcome. At present, we're not expecting it to be at the 8.5 that we achieved in 2011 overall, seeing that coming down to about 7.5. So a lot of the Rand factor as well is there, but the Rand has not weakened significantly from the levels that it was at in December. So I think if we saw the Rand continue on a weakening trend, one could expect that PPI figure to be even more, but I think it's been in around the 8 Rand level, up once or twice. It'll shoot up to 830, 840. 850, but then it'll come back down to the current levels that it's at. So I think that relative stability of that Rand exchange rate over this time period as well, if you look at on an average basis, will contribute to the PPI prices not necessarily rallying it further more than they have over the past year.
Nkanyiso, we're going to have to leave it there. Thanks so much for your time this afternoon.